Hello and welcome to McQuilling TV. I'm Allison O'Melio and joining me today is Stefanos Kazantzis, Senior Shipping and Finance Advisor at McQuilling Services. Welcome back, Stefanos.
Glad to be back.
Last time we saw you, McQuilling Services was in the midst of developing its 5-year forecast, the tanker market outlook. So we're happy to have you back today to talk to you a little bit more in depth about the report, and specifically we'd like to ask you a couple questions about the asset markets.
Okay.
So just in general, what does McQuilling Services foresee for this year in the asset market space?
All right, so when we look at a year-over-year comparison, we're expecting 2016 asset values to appreciate. Depending on the tanker sector and the H segment, we're forecasting different results. Generally speaking, for the 5-year crude tanker side, we're looking at somewhere between 8 and 12% increase year over year, and a little bit more of an appreciation on the 10-year-old side. On the clean, we're expecting the LRs to perform a little bit better than the MR segment, but still we see some slight appreciation in the MRs as well.
Okay, so why a better LR market this year?
Well, with every forecast, there's a methodology involved, and our methodology involves the analysis of the fundamentals, which leads to a forecast in earnings. We use those earnings outlook and the longer-term earnings forecast to develop a discounted cash flow process. So when you look at the valuations on that basis, it's signaling that there's some gap up that needs to be occurring in the market. We also look at regression modeling. We look at time charter rates. Correlated to asset prices, there's a very strong correlation between those variables. What we're seeing right now with current time charter rates, although they have been coming off a little bit, we still see some value in asset prices generally.
Okay. So this year, do you expect to see an increase in exposure from traditional lenders, and what's your thoughts on private equity investors?
Well, having said all that previously about asset price appreciating, right now the market is engaged in a risk-off type trade. Overall economy globally is facing some pressure. So investors are looking at safer assets, 10-year treasury yields being one. You can see the basis points of a 50 basis point reduction in the treasury yield. So there's a flight to safety, and that also affects tanker assets, because from a standard deviation or a risk profile, we seem to be one of the riskier assets in the market. Having said that as well, you also have some inventory lists which are growing, which is kind of taking the market out of an equilibrium, or more inventory, more supply of ships, less demand for those ships, so the prices are coming off a little bit right now. You're seeing some of the previous investors, private equity, looking to divest out, and that's kind of part of the risk-off trade. They entered the market at a pretty attractive price point, and the market has appreciated, so it's maybe a good time for their personal preferences to divest out. So you're seeing an inventory build up, which is driving prices a little bit down right now. But overall, fundamentally, when we look at demand and supply factors, we are seeing some decent results out there, and we do think prices will recover. So
if you were to invest your money, what tanker class would you go with?
So I'll break this up into crude and clean.
Okay.
On the clean side, we're looking at some 10% or so appreciation for the LR1 tanker. We tend to think that the versatility of the tanker and some of the dynamics right now happening in the refining sectors and just overall end user demand growing will favor the larger tankers. We like the LR1s, we like the LR2s. From the crude side, although as I said, right now there's some pressure in the market, we do like the Aframaxes. There are a couple of demand drivers in the Aframax sector that we think are going to start showcasing themselves within the year.
And what are those?
Some of those are, well, we have expected lower U.S. production, which should drive ton-mile demand up generally for the DPP side, or contribute to an increase in ton-mile demand increases. We see more Caribbean flows back into the U.S. Gulf. We see potentially some West African crude, as a Suezmax shape, but we see some Aframaxes also taking cargo. So we see some more Atlantic Basin activity, coupled with the U.S. crude export story, which is developing. There are some infrastructure constraints within the Gulf that will favor the Aframax tanker. Plus we have the Panama Canal expansion, which in our analysis on a cost per barrel basis does favor the Aframax tanker. So a lot of those things will develop over 2016. They may not be in the market right now, but when you're looking at a forecast, those are some of the things that we look at. And then on the supply side, the Aframax tanker, although ordered last year in fairly significant quantities, has been relatively under-ordered compared to other tanker sectors. And when you look at the age profile, over 16-17% of the Aframax fleet is 15 years and over. So by 2020, our forecast on the net fleet basis show about only a 4.5% growth period, not annualized, just 4.5%. So when you factor in the limited supply growth and the demand drivers, we tend to think that those earnings will outperform, potentially some triangulation opportunities in the Atlantic Basin. So although the market does maybe not appreciate that at the moment, and the factors I talked about before, we do think that there's some potential upside there that could be interesting.
And then what about on the clean side?
Well, we talked about the LRs a little bit. Obviously with the refining system being spread out more globally now, and there's different product yields in different refining sectors. There's a lot of long haul trade opportunities from the continent to the east. There's from the far east to the continent. Mm-hmm. So you are seeing the low crude oil prices, low end user prices for gasoline. They are stimulating demand. So we do think there is some real interesting just earnings opportunities for the LR tanker. So we would favor those over time. We think about 10 to 12% for the LR1s and about 10% for the LR2s increasing.
Okay, so we'll keep an eye on the Aframaxes for sure this year, and we'll check back up with you in a couple months and see how things are going.
Okay, maybe let's talk about by the end of the year. We like to look at our forecasts over the 2016 period, let things develop. Sometimes it's difficult to kind of look at a month-over-month basis and kind of judge how you're doing, right, because sometimes these fundamental factors do have to work themselves into the system. There also needs to be more conviction that they're a longer-term trend than a short-term phenomenon in the market. So maybe in December or so.
Okay. We'll get back in touch in December.
All right.
All right, thanks, Stefanos. Always a pleasure having you.
Thank you, Alison.
And that wraps up this episode of McQuilling TV. I'm Alison O'Melio. Thanks for watching.